first. Please confirm, is it visible?
Yes.
Yeah, thank you. Uh, so basically, I have divided my session, whatever given time to me for 1 hour. I have divided this into three basic portions. First, to introduce the concept of ESG and the sustainability reporting frameworks. And that this will give you an idea that why it is important and what are the basics and what are the benefits of having a ESG reporting for any organization or company. Second session we will do we I have designed for elaborating or discussing on the sustainability frameworks. Basically, what are the top global sustainability frameworks are there and which are common in practice in India also. And I will try to explain that what are the key differences and what are the different inclusions that are there in different sustainability reporting frameworks. And the last portion is dedicated to BRSR, our own India's entity reporting framework, BRSR, Business Responsibility and Sustainability Reporting, which is mandated by SEBI. SEBI has introduced this BRSR reporting framework in India. So I'm going to discuss that. That is the third portion of that, and after that we will be open to question and answer session. To whatever extent my capacity is, I will try to address all your questions. So before going to the what we say the ESG reporting, it is important to understand the global risk landscape, and it is evolving. As per the World Economic Forum Global Risk Perception Survey 24-25, these are the risk categories they have identified for next 2 years, right? Sorry. So these are the global risk categories that is identified by the World Economic Forum. And if you see, these green ones are environment related risk, and only two are there. And these are the societal risks are there. Now, if you see, in next 10 years, they have highlighted and see the whole paradigm, the whole picture has changed when it comes to addressing the risk for organization. And you will find most of the top risk are now taken by the environmental and societal related risk. Of course, technology nowadays is an integrated part. So that is why technology you will find as part of that. And nowadays, in the governance and the social issue, technology has been integrated as a different as a parameter also to address the transparency and efficient data collection in ESG reporting also. Now, this if you see this scenario, that whole focus of organization addressing the risk is now completely on the environmental domain, environmental and social and governance domain, if I would say. So that is this whole survey results. It describes the importance of ESG in for the organization and for the stakeholders as such. So this is what we are. And if you see the demand for because of these addressing these risks for the organization, the demand for non-financial information is growing. Basically, when we say the demand for non-financial information is growing, uh, why it is going? Because organizations now want to evaluate themselves, and also the ESG maturity of the organization. They want to evaluate the ESG maturity, how mature they are in terms of reporting, in terms of based on the disclosures that they are into. Second is the organizational resilience to ESG risk, including climate-related risk, to understand their own and how it could be an opportunity for an organization. That is important. The other key areas that are nowadays, which is important to mention here, it is investors, those who want it help them, the reporting practice, the disclosures will help them in help investors in taking a wise decision, or it is a decision making tool for investing in an organization based on the ESG parameters that they have uh, they have disclosed. Also, they do a comparison with the peers to address that what are the risks associated with the organization. Not only the financial risk, companies, the investors, and the other stakeholders, they do the cross-referencing of your disclosure practices, organization disclosure practices, to to identify are there any risk associated with the organization in terms of societal impacts or in terms of environmental risk associated with the organizational activities. So holistically, if I would say, the ESG disclosure provides a overview of the ESG performance of an organization. Also, for an organization, it's an advantage that they can benchmark their performance with the global peers and competitors in the market. So that is an added advantage for the organization, those who are into non-financial reporting. So before moving ahead, going ahead, the important thing is to understand what is sustainability reporting basically. So when we say sustainability reporting, as per the GRI definition, it's an overview of a company's economic, environmental, and social impacts that is caused by the uh, organization everyday activities and aspects. So sustainability reported should not be merely taken as a data collection exercise, right? It's an approach to drive an organization commitment to sustainability and demonstrate it to the stakeholders in a transparent and efficient manner. So that is the whole purpose of SR. It is not mere a data collection exercise or presenting a data or reporting a data. That was the misconception when the sustainability reported started long back. So nowadays organizations are serious. They use that data to assess, measure, and analyze their performance internally, having providing an external benefits to the organization, and present their performance in economic, social, and environmental governance parameters based on that which we cumulatively called as ESG. The last point I already have covered, that investing institutions across the world review the non-financial data that are disclosed by the organization, and they take decisions based on the investment in any new venture that they are investing by exploring the risk associated with the activities or the organization. Even a small news related to their corruption, say for example, or any kind of a governance related issue can have an impact on the investments and the stakeholders. So, for those who are new to ESG, we are talking ESG, what exactly it is. So, when we say ESG, it comprises, as the name acronym says, that it is environment, social, and governance, having a different criteria covering, we call it as key performance indicators or KPIs, or different ESG criteria to for the sake of ease of understanding. So basically, it comprises of core factors which are used to measure the sustainability and societal impacts of investments. And when we say environmental, it talks about how a company performs as a steward of nature. Social or societal, how a company manage their relationships with the employees, suppliers, customers, and communities. And the third G stands for the governance, how a company is governed, including the leadership, the compensations, the audits, and the shareholder rights, including the human rights and employee compensation and scheme benefits. So overall, what is the purpose? When we say the purpose, ESG criteria help companies not just for the financial performance, but for their positive or negative impact on the society and the environment. So that is the whole purpose of ESG. The different acronyms are there, different ESG disclosures. When we say what exactly are they, you might have heard of different reporting, sustainability reporting, ESG reporting, CSR reporting. So these are all basically addresses the some or whole part of ESG disclosures. So it refers to a company's reporting of its environmental, social, and governance performance and associated impacts. So these are the basic things that are covered. So names might be different, but some like CSR, they are mostly focusing on their social activities and the impact of their activities on the so reporting of their CSR activity that is covered. ESG provides a holistic and overview of a picture of their disclosures comprising of ESG criteria. Coming to that, why ESG reporting again? So overall, they all are linked to internal and external benefits. A good ESG disclosure generally helps in enhancing the transparency of a company, which is directly related to the building trust among the stakeholders, building trust among the investors or the peers. So that is something which is an added advantage or outcome of the going for ESG disclosures. This trust results into a robust reputation or brand value of the company, and thereby adding value creation among the employees, value creation among the upstream and downstream business, among the suppliers. So these all are the benefits of a good ESG disclosure that may be tangible or intangible, but they are a added advantage for going for a good ESG disclosure with a complete transparency and commitment. So this is again the same internal benefits. If we talk about, they help in deciding a vision and providing a strategy for an organization to enhance, to increase their performance. Also, what I likes most, and from the way I started my journey, was management systems. Developing a management system, they are key or core to the ESG. And for an organizational internal benefits, developing a robust and effective management system showing their intent on their management system, whether it's an environmental management system, energy management system. These ESG reporting will help them in developing a robust management system internally in their organization. And we all know that having a good integrated management system is always a beneficial for an organization. Also, the exercise of ESG reporting helps in organization in understanding their weakness and strengths. Uh, Also, of course, it it provides the employee motivation. All these results into some of the external benefits which I talked about earlier slide. So I'm not going to cover this again. So the overall idea, so multiple benefits are there when it comes to ESG reporting. For in a very layman language, to sum it up, or for the clear understanding that what do you mean by ESG standards and what do you mean by ESG frameworks? Because like Chauhan sir just said before the beginning, that there are a lot of jargons and acronyms that are used. So for the sake of understanding ESG standards, how we define. So I'm not going into the technical definitions of all these things, but keep it simple. ESG standards, what to report, and framework, how to report. This is the basic difference between ESG standard and ESG framework. So if you think of standards, consider it as a checklist or a scoring rubric that will help you in ensuring that the same ESG data is verifiable or comparable across the global companies or peers, so that data can be easily compared. So the frameworks, when we talk about frameworks, how to report, it's a kind of blueprint which will help organization, which will help in structuring the organization narrative and aligning the ESG with their strategy and business activities, their vision, and their principles. So this is the basic difference, that basically standards are prescriptive, while when we talk about frameworks, they are principle based. Standards, of course, when we say it's a scoring rubrics checklist, so it provides a measurable KPIs. So based on the KPIs, the indicators, the performance can be measured, the rubrics that are generated, the data can be compared with the global peers or the organization. So But the frameworks, when we talk, it offers a structure and the conceptual blueprint of the ESG, that principle-based ESG, how to report. So this is the very layman and simplest form of comparison that I can present for the laymen who are first or beginners who are introduced to this concept first time. So when I say, now we talked about ESG frameworks and standards, you might be confused between, you might have heard of different nomenclatures in market, or those who are going through that TCFD is there, GRI is there, IUCN is there, PRI is there, OECD is there. So what exactly it means? So this one slide explains or clears the difference between ESG frameworks and standards and other associated terminologies or categories of different ESG frameworks and standards. So when I say, like I already said, that standards and guidelines, so TCFD and IR, these are the strategic documents or principle-based documents. Reporting, when we say it's based, it will, like I already said, that what to report. When I say what to report, it talks like GRI, SASB is there, SASB, SASB, World Economic Forum, then different CDSB is there. So these are the reporting frameworks, right? And if you might have heard of different agencies also, like EcoVadis is there, Sustainalytics, MSCI, Russell, FTSE, Russell is there. So these are the rating agencies and benchmarks, which provides the whatever disclosures that companies are going through. These rating agencies provide, they have developed a methodology to come up with the ESG ratings or scorings, which will help organization or the peers to benchmark based on their disclosures that they have done. The next one is, you might have heard of SBTI's science-based targets, United Nations Global Compact, OECD, IUCN, PRI, Principles of Responsible Investment. These are the commitments and memberships. So these are not the frameworks, please understand. These are the commitments and the membership. Again, SDGs, you might have heard of European taxonomy. Now, a lot of discussion is going on European taxonomy. Then CSRD is there. So these World Economic Forum, these are the institutions which prepare policies and global agendas related to the sustainability or ESG reporting, or different sustainable development goals. We all have heard of that 17 SDGs are there. So these are the policy frameworks basically. And the last one, you have heard of assurance standards, like uh, IASB is their International Auditing and Assurance Standard Board. Then license assurance providers are there, AA 1000, then ISO 14064. These are all standards, assurance standards, which are basically used to provide assurance or verification of the management system. That is where the standards are there. So this complete picture describes, or I hope that the clarity provides the clarity between the standards and guidelines, and that what exactly ESG frameworks are there and what ESG standards are there, and what covers the rating agencies. Now, before jumping on individual reporting framework, uh, it is important to understand what exactly the reporting framework, irrespective irrespective of what different types of frameworks are there, what it covers, it comprises of. It comprises any, if you pick up any reporting framework, they comprises of KPIs, key performance indicators. These key performance indicators help company and stakeholder to gain visibility of their progress or performance on their measured goals, identified targets across the focus area. Now, what do you mean by focus area? When we say focus area is basically called as material topics in ESG, right? So, material topics what exactly is materiality or material topics. So basically, materiality encompasses broader uh, risk and opportunities which are related to the organizational environmental stewardship, societal impact, and strong governance. So, in a very layman language, if I would say, material topics are referred to those topics which represents the organizational most significant impacts, right? Which could have a or have an impact or which could affect a company's performance, reputation, or a long-term sustainability, which they need to address. So these are called as material topic, right? And the assessment of these material topics are called as materiality assessment. The third important component in any uh, ESG reporting framework are the content elements. Now, content elements covers the basics of the organizational, like the what are the broad organizational overview, what are its governance structure, what is the business model and activities, what are their identified risk and opportunities. This coverages the content elements. Take any reporting framework, they are based on certain principles. Like in Indian scenario, BRSR is based on nine NGBRC guidelines. So principles and nine principles are there. So like that, GRI have it is based on again different set of principles. So all the organizational frameworks basically they are based on certain principles. Now, some of the principles are accuracy, balance, clarity, comparability, reliability, timeliness, reliability, completedness, and consistency. So these are the principles that are associated with the uh, any reporting framework. And then, of course, for standards, how to report and frameworks based on which they like GRI, IRC framework, SASB, TCFD, well, I discussed in the earlier slide. So these is the basics of any reporting framework. Now, if you have an understanding of these sphere of inclusion, that in a reporting framework you can read any reporting framework universally, right? Because most of the almost all the standard frameworks they are based on these principles. They will have KPIs, they will have focus areas, they will have content elements, they are based on principles, and of course. Depending on the requirement of the organization or the compliance or mandate, the standards will be chosen according to their requirement. This is the top frameworks that are used for ESG reporting. Sorry, I cannot cover all the other topics. So mostly those who are important, I have covered in that. So basically, if I talk about GRI, GRI is a comprehensive guideline I was already talked about. It applies to every organization, irrespective of their size, their sorry. What happens to my pen? Sorry. So sorry for this scribble. When we say GRI, it applies. It's a comprehensive guideline for reporting. For our BRSR, Indian entity BRSR, is already aligned with the GRI standards, right? TCFD and the SASB standard. Uh, so basically, in GRI, the reporting is done across three standards. One is called as the universal standard, and the sector-specific standards are available, and topic standards are available in the GRI. So the second one is the SASB. SASB is basically an investor-focused topic based on the investor-focused topics. And it is industry-specific reporting framework, which including the AUMs also. And SASB stands for Sustainability Accounting Sustainability Board. And then comes the IIRC is there by integrated reporting framework, and it overarching objective is to evaluate the corporate reporting through enhanced ESG disclosure. So TCFD, again, it is a task force for climate related financial disclosures, which is climate focused and investor focused again. So four key areas are covered in the TCFD related disclosures. They are related to governance, strategy, risk, management, and metrics and targets. So these are the four key disclosure areas that are covered in TCFD. I will talk a bit about ISB later on. So I will park this for a while because a lot of when it comes to standardization, ISSB is a new development. Now, earlier there were a lot of segregated standards are there available in the market, but now ISB has come up with, after the Glasgow COP26 summit that has happened, they announced the launch of ISB in ISB is International Sustainability Standard Board, and it was launched in 2021-22 basically. So 2021-22, it was launched, announced, and so I will talk a bit about that later on ISB. So this is the new development in reporting framework. Similarly, CDP is there, formerly Carbon Disclosure Project, which collects data on climate change, water security, and deforestation. So these are all the standards that are available, which are top frameworks that are available for ESG reporting. I will talk about, give you an overview of GRI standard. And basically, when I say the GRI, Global Reporting Initiative Universal Standard 2021, the concept of this GRI standard, it covers impacts, as I already said, which is important, also called as aspect, environmental aspect, or but in general aspect of organization. Material topics, I already talked about what is materiality and what is material topics, which have a significant, which are significant to the organization or which can cause impact. That is called as the material topic. Due diligence and the stakeholder in centric. So these are important. Again, I talked about reporting principles. So reporting principles, when I say accuracy, balance, clarity, comparability, completedness, sustainability, context, and timeliness, and verifiability. This is very much important, verifiability. The data that is disclosed, that is presented, should be verified. Now, coming to the GRI standard, there are three standard topics in it: universal standard, topic specific standard, and sector specific standard. So GRI universal standard has, we call it as GRI 1 to 3, GRI 3. These are the principles and the requirements for using GRI. All these three standards, they provide the principles and the requirements of GRI. So the second one is the topic specific standard, topic specific standard 11 to sorry, they are the topics which relate to use the for different, these sector specific are for 40 sectors. Different standards are present, and total. When we talk about GRI 301 to 308, these are environmental related topics that are there. 401 to 409 basically are labor or like standards. So there are different topic specific standards are there. Similarly, GRI 201 to 418. So 201 to 418. These are many standards are there, individual topic specific standards in the GRI. Sector specific standards, depending on your sector, organizational sector, they can choose a specific sector and report specific information on their material topic. So basically a sector specific material topic, if I would say, sector specific material topic. Uh, they are based on that. Now there are two things are important to mention in GRI context. In accordance with GRI standard and reference with GRI standard, these are the two basic standards that are for reporting practice that are used. So what it means in accordance with the GRI, I will make note here. So in accordance with the GRI, when I say in accordance में, so in accordance, basically it is more rigorous. It's a more rigorous of way of reporting. It requires strict adherence to all all nine requirements that are there in the GRI of a universal standard it requires to cover each. So overall, it provides a comprehensive picture. So those companies who are going for this, they complete nine requirement universal standards and the topics they are covering, all the material topics. This is called as in accordance with the GRI standard. The second one is the reference with GRI standard. Now, reference with the GRI standard, when I say, so reference with GRI, it is clear that it is less rigid, right? And it allows the use of selected standards. Not necessary that all the standards should be covered. You say, for example, you can report on specific topics, like say, for example, water, energy, and safety. You can report on whatever material topics you have, you can report on the selected standards, not necessary to cover each and every standard for your reporting purpose. So that is called as reference. If the companies are disclosing the selected standards, so such kind of GRI reporting is called as reference with GRI. So this is the basic difference of GRI standard that is there. Nutshell overview, if I provide you the comparison of different frameworks and standard. So SASB is basically US focused, right? SASB is US focused and it is and the second IRC, I think someone else is using the pen. Okay, IRC is basically global or it's a global scale framework for the global scale, and GRI is again for the global scale I just talked about. For SASB, there is a target disclosures that is mandatory. In IRC, it is flexible and it's voluntary in GRI. So IRC and SASB, they are investor focused and all stakeholders needs to be covered in the GRI. So this is the basic comparison of different frameworks and standards that are covered in the top frameworks that are there. So before jumping to the slide, I just talked about that when we say ISB, yeah, Integrated Sustainability Reporting, sorry. Hmm. So when we say the International Sustainability Standard Board, ISSB. So ISB, as I already said, in Glasgow 26, COP26 Glasgow Summit, it was announced that there is need for ISB or a standard board. Basically, the purpose is to have a standardization of ES instead of standardization of ESG reports, disclosures or reporting frameworks. So what happens, how ISB is formed? Basically, what happens that CDSB consolidated into IFRS Foundation. IFRS is an International Financial Reporting Standard. F stands for financial. And they have come up with the IFRS S1 and S2, which is now common. S stands for sustainability. So fine, they have integrated the financial reporting with the sustainability reporting and double materiality that is considered. So CDSB consolidated into IFRS. Apart from CDSB, value reporting, VRF, we call it as consolidated. So it is value reporting foundation, VRF. It gets consolidated into. VRF is again a consolidation of SASB and IR. So these gets consolidated into VRF, and VRF further consolidated into IFRS foundation, and IFRS foundation results into foundation of ISB. So this is the standardization of ESG that is going to happen. Again, uh, as I've said, it is a standardization. So TCFD influences IS. It influences the from ISSB, and GRI. GRI is basically complementing the ISB. It complements. So this is how the new shift in the reporting is happening globally, where the whole frameworks are now consolidated as a common framework, and it will help standardization, because earlier it is causing confusion that companies are reporting multiple frameworks or disclosing their ESG data on sorry, on different frameworks they are reporting. And I think this is more robust and more standardized way of reporting. So this is we are talking. Now coming to the ESG regulations in India. It is important, before talking about BRSR, it is important to understand the basic idea of the evolution of BRSR that has happened. Now, in 2009, MCA, they released the uh, voluntary CSR guidelines. And say in 2011, it was NVG. MCA issued the NVG, which is basically in 2011, Ministry of Corporate Affairs, they issued the NVG on social, environmental, economic responsibilities of business. Now, NVGA, called as National Voluntary Guidelines, uh, it gets updated in 2019, March 2019. So NVG in March 2019, basically, maybe one, I'm not, I'm sure it's March 2019. So it these NVGs gets updated into NGRBC. Now, NGRBC is the National Guidelines for Responsible Business Conduct. For responsible business conduct. So this is the latest, based on which the this ESG so sorry, BRSR framework is developed. So NGRB has 9 basic principles which are aligned with the 17 SDGs. They are well aligned with 17 SDGs. So whatever BRSR frameworks are there, they follow these 9 principles. They are based on these 9 principles. Now coming to the applicability of BRSR. So in 2021, BRSR, SEBI introduced the BRSR for top 1,000 listed entities as per the market capitalization. Now, the again in 2023, different other ESG disclosures and value chain reporting, carbon trading schemes was introduced. That's a continuous process. And so when it comes to BRSR core, in 2023, 24, top 150 listed companies uh, are are mandated for BRSR core. I will talk about BRSR core and light later on. And 2024 to 25, it is 250 listed companies Then it is we envision that 25, 26, it should be 500. And from coming 2026, 27, top 1,000 listed companies needs to disclose the BRSR core, follow the BRSR core. Applicability of BRSR core will be there for these companies. So at present, 150 to 250, 150 companies, it is mandatory to disclose their BRSR. So NGRBC, as I've said, NGRBC has 9 principles. Ministry of Corporate Affairs established a set of guidelines already talked about. 9 principles, I will talk about this. Each principles, it includes the indicators that are categorized as essential, which is mandatory indicators, and leadership, which is voluntary indicators, right? So all these companies, I have said that those who, so 9 principles, these are the essential and the leadership voluntary indicators are there. As name said, leadership is voluntary and essential are mandatory if you are going for BRSR. These are the 9 principles. Basically, I'm not going to read that. You will get the slides. So overall, it is business should conduct a governance themselves. Business should provide a good service to the manner that is sustainable and safe. Business should respect and promote the well-being. Business should encourage the influence in public through and regulatory policy. Business should engage with and provide value to their consumers in responsible manner. So overall, these 9 principles are there, which are based on which the BRSR reporting happens. Now coming to the in 2012, BRR was there. So and now it is updated in 2021 BRSR. BRSR making a more comprehensive ESG reporting framework as compared to 2012 BRR. So this I will not do the comparison. So we will stick to the BRSR for the sake of time. So basically in the BRSR, there are 3 reporting sections: general disclosures, management and process, principle-wise performance. And it includes different 2 formats: essential indicators and leadership indicators. Total 140 questions and 98 mandatory, including 42 leadership indicators. Some of the indicators are overlapping. If you see the unique one, the indicators are 68 and 39 leadership indicators. So total 140 questions will remain there. Qualitative and quantitative indicators are there, and the BRSR needs to be disclosed as part of their annual report and MCA 21 portal in XBRL language format. It needs to be submitted on the MCA. Now coming to the BRSR, those our other important topic for today. BRSR framework is mandatory reporting framework, as already said, as per the market capitalization for top 1,000 listed companies. Now, BRSR framework, as I already said, that it was introduced by the SEBI. SEBI is the regulatory authority overseeing the security and commodity market. It well aligns with the GRI and the SASB framework. So it is internationally recognized. So the overall purpose of BRSR is to enhance the transparency, accountability, and the company's non-financial performance to encourage and integrate the ESG consideration and stakeholder with reliable and comparable information. That is, I'm skipping this for the sake of time. So benefits we have already seen. Whatever the ESG framework benefits that are there, the same benefits are applicable for BRSR also. There is nothing much difference. Yes, it is. This is important to understand that what is the structure and format of BRSR. When we say BRSR structure, it has general disclosure. General disclosure, basically, if you see it is required to provide a accounting of details of business activities for 90% of the turnover. So for that, it is mandated to have a BRSR. So BRSR structure A has a general disclosure which talks about the details of listed entities, products and services, operations, holdings, employees, CSR details, and etc. etc. The section B, it talks about management and process disclosures. When we say The process disclosure, the company is required to disclose the information on their policies, their processes related to the NGRBC guidelines or principles concerning their leadership, governance, and the stakeholder engagement. So these are the key things. And the third, section C is principle-wise performance disclosure, which covers the essential indicators and leadership indicators, right? So these are important. Uh, Now, based on these, there are two BRSR formats for disclosures proposed by the MCA that are there. So BRSR Comprehensive and BRSR Light. BRSR Comprehensive, as I already said, it is mandatory for obligated entities to use for reporting their ESG performance, like top 150, they needs to go with the comprehensive. Comprehensive, when I say comprehensive, the BRSR disclosure should have a mandate reasonable assurance on BRSR core disclosures. This is required from the financial year 23-24. So mandatory reasonable assurance is required. Now, when we say mandatory reasonable assurance, it is that should be done by the third party independent body. So that is mandate. So in this, it covers the broader scope and reporting on all products, services constituting 90% of turnover minimum should be covered under the BRSR comprehensive. 1,000 companies top listed needs to go for the BRSR comprehensive. Then BRSR Light. BRSR Light is for beyond 1,000 companies who want to showcase or those who don't have a prior experience in sustainability reporting can adopt for that. Non-obligated entities, they can go for BRSR Lite. BRSR Lite is basically a part down version of the BRSR comprehensive format, comprising of fewer indicators under the 9 NGRBC principles. So it focuses on key ESG areas relevant and pertinent to the company size, industry, identifying the materiality, ESG aspects, sourcing. So it is voluntary. Assurance on BRSR Lite is voluntary, not mandatory. But for BRSR Comprehensive, it is mandatory. So this is the basic difference that I just talked about. Light is basically for not in the top 1,000 company, but they want to showcase, they want to practice the sustainability reporting. They can go for BRSR Light. No mandatory assurance is required. In comprehensive, top 1,000 listed companies by market capitalization promote transparency and accountability for larger companies. ESG performance require a reasonable assurance. Now comes the another topic which is called as BRSR core. BRSR core, it serves as a subset to the BRSR comprehensive framework intended for larger companies transitioning towards comprehensive reporting. It includes a limited set of mandatory disclosures related to core environmental and governance aspects. So it is a foundational step for large company as they progress toward the BRSR comprehensive reporting, and mandatory reasonable assurance is required for BRSR core disclosures stating from the financial year 23-24 for top 150 companies. I already explained that year-wise description that in 23-24, 150 listed, 24-25 top 250, 25-26, 500 companies, and year 26-27, it will be mandatory for 1,000 listed companies. So already I have covered all these stuffs. So this is also I have covered. So the timeline for obligation framework or framework obligation for companies. So BRSR framework, as I talked about in India, there are 140 indicators. Section A has 24 questions. Section B has 12 questions. Section essential mandatory based on the 9 NG RBC principles. It has 68 essential mandatory and 39 voluntary indicators. So that is there. So total, if you see total 140 questions are there. So this is the breakup of principle wise number of indicators for as per the principle in the BRSR reporting that will be required. So this is already the general disclosure that what it comprises of. It comprises of company detail, products and services, all the basic information for their activities, aspects, and business entity. So B has in policy and management process, it has 4 questions. Governance and leadership oversight, it has again 4 questions and 4 questions. So comprising this section comprising of 12 total questions in stakeholder engagement, including the stakeholder engagement. Similarly, leadership and essential principle 1 is all about ethics and integrative. Some questions are quantitative and some are qualitative. It is focused on employees, basically leadership indicators. Similarly, the principle 2, leadership and essential, focused on communities and regulators. Again, it has quantitative as well as qualitative indicators in it. This is the major difference in BRR earlier and the BRSR. BRSR comprises of qualitative as well as quantitative. This principle 4 basically focused on prioritizing the internal and external stakeholders. These are the list of 3 leadership indicators and 2 essential indicators for the stakeholder engagement under the are there. Now, leadership and essential principle 5 is human right. Principle 6 related to environment. Again, principle 7 is related to peers and regulators, policy advocacy. Uh, Principle 8, inclusive growth, which is related to and focused on communities, like details of social impact assessment of projects undertaken, provide information on projects, rehabilitation, resettlements, describe the mechanism to receive and redress grievance, a percentage of input material sourced from the local suppliers. Principle 9 is customer centric, customer value, and focuses on the customer. Again, have 4 essential indicators and 5 leadership indicators, including qualitative and quantitative, which needs to be disclosed. Link for if you are interested in that. In the slide, I have given you the BRSR format, a detailed PDF you will get, having a detailed indicators, list of indicators, the questions that are there, the format that in which the disclosures or data needs to be submitted. You will find on this link that when you get that PPT, you can share it from there. So I'm just skipping these. These are basic, but so I talked about materiality. Materiality, as we discussed, that it is the basic foundation to the ESG assessment. That companies are expected to focus on reporting on the ESG issues that are most material to their business. We call it significant. We call it as material to their business and stakeholders. So, materiality assessment is a formal exercise to identify and prioritize the most important ESG issue or factor for a specific company. Like for, say, for example, some company, energy could be a material issue, water could be a material issue, biodiversity could be a material issue. So it depends on their own assessment based on which they will identify that which indicator is important for them that they should focus on reporting. Now, material through different lens have different definitions. When it comes to, there are 3 types of materiality for core financial people. It's a financial materiality outside in, and issue in is material if it affects the company cash flow, financial position, or overall value creation. Impact materiality, an issue is material if the company activities causes a significant actual or potential positive or negative impact on the environment, society, and economy. Then comes the double materiality. Like most of the now recent standards, you will find double materiality. So a comprehensive approach that considers both financial and impact materiality, recognizing that companies can be affected by the ESG issue. So it's a two-way. So they consider both financial materiality as well as the impact materiality into their focus of reporting on ESG issues. So this is the two-way, which we call it as a double materiality. So when we talk about steps of material assessment, first thing is to identify your risk and opportunities, covering your internal and external stakeholder views and opinions. Second, prioritize your materiality issue that is there through your internal assessment with respect to your business, which are material topics which you need to address in your reporting. Then validate and integrate. Integrate means integrating by aligning with the targets and goals that you have set for achieving that. This is KPMG's International Cooperative 2014 materiality process is there. So it says that there are total 7 processes that steps that needs to be followed when it comes to materiality. Now coming the last portion of today's discussion, that is the sustainability reporting maturity model. You see how you will determine that how mature the organization is there based on their ESG score or the issues that they have BRSR framework outlined so that they have reported on. So SRMM is a self-assessment tool which is developed by the ICAI, the Institute of Chartered Accountant of India, which helps the Indian companies to assess and improve their sustainability reporting practices. So what they have done, it is based on the BRSR format and the scoring mechanism that is issued by the MCA in India. This outlines the specific social and environmental disclosures that companies listed on stock exchanges in India are required to report on. So based on that, SRMM uh, they provide a score, a percentage of score based on that SRM, and the 4 categories are given, or the maturity categories are given. One is the formative stage. The first stage is the formative stage. If you have less than 25% of the total score for the last 3 years, it means that the organization maturity pyramid is at the formative stage. It means the organization is in the beginning of the sustainability reporting. The second stage is the emerging stage, where it means that the organization has started collecting and reporting. They need to collect more data. So they are on the track, but they still need to collect more data. Established stage is the third stage of maturity, where the company has now started reporting wider range of metrics. And the last one are the exceptional case or leading by example, where it is said that the comprehensive reporting and stakeholder engagement are ensured. So this is the scale based on the BRSR score. If up to 25% BRSR score, it means it is in the formative stage. Emerging stage, 25% up to 50% is the emerging stage. Then established state, the score is greater than 50% up to 75%. It is the organization is considered to be have established a formal function, policies, systems for BRSR. And 75% and above, it means the organization strive for more than compliance and work towards being a market leader. So these are some of the maturity models that are developed based on which you can easily uh, assess the maturity of any organization based on their BRSR scores that they have given. For the participant benefit,